Hi, everybody. Welcome back to Ox Talks. It is Sunday, January 7th, 2024. Yes, in the last video, I did say December. Some of you caught that. My apologies. I wanted to just touch base on Sunday afternoon. Hope you're having a good weekend. We are back from the Las Vegas trip. Got back safely yesterday evening, mid-evening, about 8 o'clock at night. Unpacked everything, getting back to the routine for the beginning of the work week. So got a workout in this morning, was in the office thereafter, returning just some late emails, entering making some entries and getting organized for the week. It's good to do that. Think about setting your goals for the week with your business and what you want to accomplish before the week starts. So we did surpass 4,000 subscribers on the 5th. Which was Friday evening. I want to thank all of you. Means a lot to me. It's interesting. January 5th was exactly 90 days from the first day I launched a video on this channel. So in 90 days, we got to 4,000 subscribers. And that's because each and every one of you, who I appreciate, means a lot to me, that you subscribe to the channel, that you watch the videos, hit the like button, hit the bell notification, and please keep sharing the videos with family, friends, colleagues, and coworkers so we can wake people up about what is really happening in this economy. A couple of stories I'll share with you that I saw today I thought were of economic importance. But I wanted to start by saying thank you. We got to 4,000. Let's get to 5,000. I can only do that with your help and with you guys spreading the word and sharing these videos. I'll come on here almost every day, hit the record button, and do my best to share current events with you, give you some insight into what it's like to run a law practice here in my state of California. And hopefully you guys gather some insight and get tidbits from these videos. You're able to apply this in your daily lives. That means a lot to me, and the comments mean a lot to me. I do read them all and try to respond to most of them. So I have a case right now where we've served a witness with a deposition subpoena to appear and testify. It's not at trial, it's testifying in a deposition proceeding with a trial coming up later in the year. The subpoena was issued by me. My process server served it. The witness is pushing back on appearing or not appearing. Look, when I issue a subpoena as an attorney, a licensed lawyer here in my state, that carries the weight of the court. And so what happens is in a deposition where a witness has been subpoenaed and they fail to appear, what I do is I have the court reporter present. We go, quote unquote, on the record where the stenographer is taking down everything I'm saying. We normally wait 10, 15 minutes for the witness to appear. If he or she does not appear, we go on the record and we do what's called a declaration of non-appearance, where I go on record. I attach as an exhibit the deposition subpoena. I attach the proof of service indicating that the witness was served, that the witness did not appear for the deposition, that we gave the witness sufficient time to appear. And then what I do is the court reporter prepares that transcript, that non-appearance declaration for me, and then I file a motion to compel the deposition against the witness and for monetary sanctions. I also have the ability to ask the court to schedule what's called an order to show cause rate contempt for failure to appear at the deposition. So there are consequences, both monetary and potentially even criminal consequences, for a witness that fails to show up after I've issued a subpoena in an active case in my state. I don't know if that's interesting to you guys or not, but look, it doesn't always go smoothly. Sometimes witnesses don't want to appear, understandably, whether they believe have something to hide or not. It's an inconvenience, and they believe they can kind of blow it off. It's a little different than a jury summons, folks. So at least in my state, it does carry penalties and weight. So that's my little tidbit today that was on my mind about a witness that's pushing back on me on a case. The economy. things continue to look very, very bleak. Two stories today. One is from Zero Hedge, came out today, this morning. The California Teachers Retirement System, CalSTRS, is in trouble. This is one of the biggest public pension plans in the United States. Plans to borrow tens of billions of dollars to maintain liquidity instead of triggering a fire sale of its assets. This is the teachers' retirement system. This is where the teachers are contributing a portion of their paychecks into the retirement plan, planning and hoping that down the road, when they're of the retirement age, they're going to be able to draw these retirement amounts down. This is what we're talking about, folks. It is a big, big deal. It says Bloomberg reports the roughly $318 billion California State Teachers Retirement System plans to borrow $30 billion, or about 10% of its portfolio, instead of raising funds through an asset sale that might trigger fire sales. Fire sales meaning selling assets hurriedly and usually at far below market value. It says CalSTRS board members will review the first draft of the policy next Thursday if approved. The leverage would be used on a temporary basis to fulfill cash flow needs in circumstances when it is disadvantageous, to sell assets, the policy document stated. I'll tell you this, we're going to get into this in a second. It's because the value of these assets are tied to commercial real estate, which has tanked. And therefore, the value of the assets have gone down, and the value of the retirement plan as a whole has cratered. So they're having to go and take on debt to keep liquidity going. It says, according to CalSTRS consultant Makita Investment Group, the public pension fund already deploys leverage upwards of 4% of its portfolio, adding that proposed increased leverage won't be used for a new asset allocation policy, but rather used to smooth cash flow as an intermittent tool to manage their portfolio. That means they're not borrowing the funds to go and acquire additional assets. They're just trying to provide cash flow, meaning, plug the holes in the dam. They are bleeding out. It says the need to increase leverage comes after a report from the Financial Times last April explained that CalSTRS was planning to write down the value of its $52 billion commercial real estate portfolio after high interest rates crushed the value of office towers. At the time of the FT report, CalSTRS Chief Investment Officer Christopher Ailman told the media outlet that, quote, office real estate is probably down 20% in value just based on the rise of the interest rates. Adding, our real estate consultants spoke to the board last month and that they felt the real estate was going to have a negative year or two. What that means is it's going to keep collapsing. For CalSTRS, CRE, commercial real estate, was one of the best performing asset classes until the pandemic and the Fed embarked on the most aggressive interest rate hiking cycle in a generation. FT noted the real estate makes up about 17% of the CalSTRS overall assets. So we'll keep a watch on this. They are having to go and borrow money. So what interest rate are they borrowing this money? They're borrowing at the current rate, which is much higher than that rate was a year or two ago. So this is a slippery slope for the California teachers' pension retirement fund. It is not good. This is one of the largest, one of the largest states in the nation, one of the largest retirement funds in the nation. Look, if you have an employer and you're relying on your retirement being there when you come to retirement age, in the economic situation that we're looking at right now, you have to really question that. This money simply may not be there. What if this 17% of their fund held in CRE, commercial real estate, continues to decline in value, which it will? They're going to stack up more losses. They're going to have to take on more debt, which is a slippery slope. The snowball is rolling down the hill and getting larger. Next article I saw from CNBC just came out a few hours ago. Largest U.S. radio company, Audacy, files for bankruptcy protection. It says, Audacy, the radio and podcast giant, said Sunday it plans to file Chapter 11 bankruptcy protection in Texas to reduce its debt. The restructuring agreement will allow Audacy to slash its total debt load by 80% to about $350 million from around $1.9 billion, the company said. And this is the 10th, what is it? I think it's one of the largest radio companies in this country. So again, debt levels are overcoming the ability of these companies to financially survive. How much more of this are we going to see unfolding this year in 2024? It says, over the past few years, we've strategically transformed Odyssey into a leading, scaled, multi-platform audio content and entertainment company, David Field, CEO of Odyssey, said in his statement. However, there's been a perfect storm of macroeconomic challenges, which has burdened the company, facing the traditional advertising market, led sharp reduction in radio and spending. These factors have severely impacted our financial condition. So how many creditors of Odyssey are going to take a haircut or are going to be eliminated altogether in this Chapter 11 bankruptcy, which is a reorganization type of bankruptcy? It's staggering. It's not surprising. Those are the two things I saw today I wanted to share with all of you. The workout this morning, got the full body workout in. I will say this, I started a new 6-week challenge with my workout group. I'm up about 8 pounds. It's not surprising to me because, you know, the holidays, it's impossible to avoid the gatherings, even though making smart choices with diet or trying to when you're at a party or a function for a client, it still has an impact. And look, my exercise routine has not changed at all. So what that means, as I've been saying, is that diet is such a crucial component of your overall plan to get fit, reduce weight, reduce body fat mass, and just overall get more physically fit. So I'm starting today. It's not necessarily a New Year's resolution. I'm just going to get back to the basics. Got to tighten up the diet. Even grabbing those extra, crackers or chips or a cookie here and there, that stuff adds up. You've got to be really, really mindful of the things that you put in your body. So with that being said, hey, we're all in this together economically. We're all in this together from a physical fitness standpoint. Everybody has to have a baseline that works for them. I hope the video's been informative today for all of you on a Sunday afternoon. Please have a great rest of your Sunday, and I wish you all a prosperous week this week. I'll touch base tomorrow with another video, and let's see where everything opens up. I saw the futures tonight. The 10-year is well over 4% now. That's not going to bode well. But the stock market, it probably also will not bode well for silver and gold. Although silver and gold's been a bit more resilient lately. Let's see how this plays out. The stock market futures looked about flat. Again, have a great night. Thank you all for the support. See you tomorrow. Bye.